This says if you don't know what you're doing in the Forex market, you can lose your money. Okay, and I put that up right up front so that you know that this is serious business. Okay, and I take it very seriously, and it's your money, so we better take it seriously. Okay, the other thing this says so is this, that I'm not a commodities trading advisor, a CTA. Now, what that basically means is no matter what I show you today and how great it is and so forth, okay, the one thing you've got to understand is I can't trade your account for you. All right, that's where you're going to come in. You're always going to be in control. You're always going to be the one pushing the buttons. All right, so I've got to make sure that you've got the right formula, right, the right downside protection, so you're confident enough to push the button at the right time. That's what trading's all about. So that's what I'm going to do. Okay, I'm going to take you through this. I'm going to make sure that you have this formula in your back pocket so you can use it today. All right, and really I want you prepared to at least play with it today so that tomorrow, and if you haven't written it down, please do. All right, this is a big deal. All right, it's such a big deal that here at Market Traders Institute, we've actually set up a session, all right, with our master trader, Josh Martinez. Some of you might have seen him before on CNBC and so forth. But the fact of the matter is, all right, he's having a special session tonight at 7 o'clock to do all of the setups for this Great British Pound move. And whether it goes up or down doesn't matter. We're just looking for it to break out, all right, of a technical box and then run like the wind. Okay, and I mean, this is, and I don't want to overstate it, but I don't know that I can overstate it. Okay, this is the kind of thing that traders look for. All right, George Soros didn't make his billions, okay, in one fell swoop, but he did have that one big trade on the what? On the Great British Pound that made him. Do you understand what I mean? Traders always have those one or two events, all right, that make them. So you didn't get Microsoft at 2, all right? You didn't buy Apple at 9. But here's an opportunity, all right, for you to make some money on the Great British Pound, and I'm going to take you through it. I'm Joe Cavallaro, all right? I'm your host. Renee did a great job of introducing me. She told you that I've traded all the markets, been licensed in all of them, and that's true, okay? I've been a principal at a couple of firms. I've traded the big accounts, okay, for those firms, and I've managed their trading desks. Now, why should any of that be important to you, right? Well, there's 2 reasons. Number 1, gang, look, I know the difference between the markets. Okay, and you're a trader that's trying to figure out which market you're going to trade and which one you can be most effective at. Well, the fact of the matter is you can make money at all of them. That just makes sense, right? If somebody comes on today and says you can make money in the stock market, well, guess what? They're right. Okay, you can make money in all of them. So why do I want to talk about the Forex? Well, it's because this is the market that gives the trader every available advantage. And we're going to talk about those advantages today so you can see the difference and you can see how you can leverage those advantages. All right, especially if you're a new person that's trading from home, from your kitchen table. So we're going to talk about those advantages. All right, and the other thing that I want to mention to you is this. See this right here? I've managed trading desks of 10 or 15 or 25 traders at a time. You know what my job was? It's pretty simple. Every day that I came in the office, my job was make sure that every trader on my desk was profitable. Okay, that they had the formulas and the strategies and the tools and the downside protection so they could put that all together. And when their profit statement came out, right at the end of the week or at the end of the month, it had some green on it. Okay, well, that's what I'm going to do for you today. All right, fact of the matter is, by logging in here, what you really did for today is you just sat down on my trading desk, and I'm going to give you the strategies and the tools and the downside protection. I'm going to help you put it all together so you can make some of that green stuff too. I hope you don't mind, right? Let's talk about making some money. Is that okay? Right? That's not taboo. That's what this is all about. So I'm going to take you through this. By the time we're done, you're going to know flat out more about making money in the Forex than 99% of the people on the planet. And we're going to go live. All right, that's always the best way to learn. Don't tell me something, show it to me, right? Because anybody can give you some theory. All right, anybody can give you some theory and you know, and give you some knowledge and all the fancy vocabulary. My belief is get out there and do it, because that's the best way to learn. That's the best way to see anything. Repetition, right, is always the mother of skill. So we're going to go live, show you how to enter a trade, how to exit a trade. And at the end of this, look, if it all makes sense, you just give yourself a shot at it. So I'm going to show you a formula. I want you to write down that word. Okay, trading is not a secret. I get so tired of that, right? The secret of trading, that's all nonsense. All right, trading is all about a formula. All right, a series of steps, repeatable things that you're going to do over and over and over again. All right, they're going to keep on bringing you success. I'm going to show you a formula in this market right now. I'm going to do it using an awesome piece of software, all right, that's going to give you clarity when it comes to the market. And pay close attention when I'm going through that software. I'm going to show you what all the buttons do, okay, so that you're prepared to be able to use it, prepared to put all this together so you can trade live literally today. Okay, you're going to have this in your back pocket, at least so it's functional for you today. But really what I want to do is get you started so that by tomorrow, all right, when Article 50 comes out, that's something that you can take advantage of. And here's the cool part about my webinar: no matter what I show you, you're going to be able to use it. All right, you'll be able to try it and test it. You'll be able to take advantage of all of it risk-free to you financially. Okay, now that we're all assembled, right? Some of you know my group, all right? I'm coming to you from the Market Traders Institute. I'm here in Orlando, Florida. All right, if you Googled me before you got here, we already know we've been in the business of training new people to trade the Forex market for the last 23 years. We've been teaching this formula, all right? More than 30,000 people have come through our program worldwide. That's the group that we support on a daily basis, all right, with our live trading webinars and so forth, all right? We've been on all the channels. We've been in Inc. magazine 2 years in a row, all right? What do they say about us? They're talking about our group at the same time they talk about Microsoft, okay, and GoPro and Timberland. Now, how do we get there? It's pretty simple. It's about results, okay? And results in the market, you measure them in dollars. That's what people are looking for, okay? Everything else is just conversation. But when you get results, I mean, that attracts the right attention, all right? And I got to tell you, just very quickly, all right, I don't know how many of you know who the Shark Tank is, right? You in the States, you've probably seen the TV show where the multimillionaires get together and then they look at different businesses and they make a decision, right, if they want to get involved. Well, the guy on the left, okay, that shark, that's Kevin Harrington. He saw exactly what I'm about to show you here today. Not only that, but he came in here, okay, working with our CEO, Jared Martinez. That's the chief, right? The Forex chief. He came in here and said, show me the results you're getting for your clients. When he saw them, he said, you know what? I'm getting involved. All right. So we have partnered with the Shark Tank people. All right. That's the kind of results we're able to deliver. So now I'm going to deliver some of them for you. And when I told you, this is when you get your pencil moving, really, because I want to make sure you understand the advantages in this market. Here's 4 of them: liquidity, flexibility, size, and simplicity. And yes, I am going quick because I told you we got a lot to cover. All right. I want you to know what it is, right, that you're about to approach here. And when you're talking about advantages, this market gives you all of them. Let's talk about liquidity for a second. All right, what's that? That's a fancy word that means what? It's a market that you can get into or out of easily. All right, in this market, right, you got $5.3 trillion a day going through it. And it's open round the clock, and there's always a buyer and there's always a seller. Okay, you can get into or out of this market in 1 second or less. And why that's important, you can write it on your paper, is that lowers your risk. All right, think about this. If you can get into a market in 1 second, that means what? If you see an opportunity, you don't miss it, okay? If you can get out of a market in 1 second, right, whether you want to or you have to. Why would I want to? Well, to protect the profit, right? Why would I have to? Well, to protect your downside, all right? And if you can turn your trade into cash in 1 second, okay, that's gonna lower your risk. Very important. All right, flexibility, though, is one of the main reasons people like you are getting involved in this market, because this market is open round the clock. Write that down. It's open 24 hours. Okay. The fact of the matter is, you don't have to turn your life upside down in order to be able to participate in this one. Think about it. The stock market opens at 9:30, closes at 4, right? So if you want to trade that market, you got to make sure that those hours fit into your schedule. And sometimes that's not the easiest thing to do. So it becomes an either or situation, right? I got to work or I can trade, but I can't necessarily do both. Well, because this market's open round the clock, that means whenever you're ready to trade. Okay, when you're done with your shift at work, when you're done with your church and family commitments and so forth, and you finally get a few minutes to sit down at your dining room table, you crack open your laptop, this market's going to be there waiting for you. That's one of the main reasons people come to this market. All right, I like it because of the size. All right, when I tell you $5.3 trillion a day, gang, this is the biggest market in the world. It's bigger than all the other ones combined. Okay, this is what I call the big pile of money. Right? Some people say, hey, Joe, where's that big pile of money? Right? Well, this is it. Okay, this is the currency market. This is all the money in the world. All right, so you found the big pile of money. All right, you're standing right next to it. So now what are you going to do? Well, as a trader, you want to reach into that pile, right? On a daily or weekly or a monthly basis, you reach in and you grab out a handful, right? You start making your own pile. Well, let's make your own pile, okay? And the fact is, it's not going to take me long to teach you this because of the last word. It's simple, okay? This isn't the stock market where I got to teach you about 400 companies if you're going to be any good at it. All right, this isn't options where I got to teach you a new language. Okay, this is the currency market where if you know your major currencies, you're right there already ready to have the conversation. Okay, now if you don't know them, I want you to jot them down because in this market, all right, this is what you're going to be trading, the major currencies of the world. Okay, of course you got the US dollar and the euro and the Canadian, all right, you got the pound and the yen and the franc, you got the Aussie and the Kiwi. Okay, these are the currencies that you're going to be trading. All right, now understand, when you see currencies, you're always going to see them in what's called a pair, okay? One currency trading against the other, and every time you see a currency pair, it's going to be followed by an exchange rate. Now, that's got to be a familiar term, I bet, to most of you, right? If you've been traveling, you've been to the bank, you've been to the airport, right? Whenever you see one of those currency exchange windows and you see this information, you already know what it means, right? It means you can walk up to the window, right? And if you hand them over a euro, what are they going to do? They're going to hand you back US dollars at the going rate, at the exchange rate. So they're going to hand you back about $1.06 US. And if you know this, or kind of functionally how it works, you're right there. All I've got to do is add just a little information so you understand what it means to be a currency trader. Fact of the matter is, what we do is pretty easy. All right, we trade exchange rates for profit. That's it. Currency traders trade exchange rates for profit, and whether they go up or they go down, we can make money at this in either direction. All right, now most people, the average person, all right, when they talk about exchange rates, they only want to talk about them in terms of what? Dollars and cents, right? Well, here's where traders are going to be a little different. All right, you're going to look a little further to the right, to these last two decimal places, to what we call the pips. Now you got to write that down. All right, PIP stands for price interest point. It's tiny little movements in the exchange rate, all the way out there at the third and fourth decimal place. That's what we're looking for in terms of up or down change. We're looking to capture those moves. We're looking to capture pips, because understand, exchange rates do not move dollars at a time. They do not move cents at a time. They move pips at a time. So we're looking to capture as many of those pips as possible. And I'll give you an example. Okay, if you're going to be a currency trader, let me just give you an example of how it works. Here's a currency pair, right? The euro and the US dollar. Let's say our exchange rate is 106.25. Now, during the day, all right, we might have a strong euro, right? Or we might have a weak dollar. You hear that all the time. Well, if either of these happen, right, what's going to happen to my exchange rate? Well, look, that's what moves my seesaw, right? My exchange rate's going to go up. Now, if it should happen to go from 106.25 up to 106.95, look at this. That's a difference of 70 pips. Do you see that? There they are, okay? At the third and fourth decimal place. That's where the pips are. So now you know where to find them. So what do you have to do to capture them? Well, that's easy. You got to go to your account and you do what traders do. You buy low and you sell high, right? And you follow your formula and you protect your downside. This is going to be your repeatable exercise. You're going to do what traders do, all right, over and over and over again to collect those pips. Now, having said that, okay, here's what I know. No matter how many pips you collect, you can't pay your bills with them. What do I mean? Well, if you went to pay your car payment, right, and you went to the bank and you tried to pay it in pips, your banker would look at you funny, right? So you got to turn these pips into dollars. So how do you do that? Well, that's where you come in, all right? This is where you come in. As a trader, you're going to be making decisions, all right? Here's the first one. You're going to be making trades based on how confident you are. You got to write this down. How confident you are in the trade is going to determine two things. Number one, how much money you put into the trade, and number two, how much profit you take out of it. All right, yeah, take good notes, because right here, this is where the money is. All right, somebody just asked me, well, how much money do I need to start trading? Well, you've got a couple of options, okay? You can trade a micro lot, a mini lot, or a standard lot, right? Micro, mini, or standard. Now, with a micro lot, what does that require from you? That's a $20 investment, right? That's a $20 trade. And that's not a lot of money, right? $20, I know what you're wondering. What can I do with that? Well, if we're in the stock market, you can't do much with $20. You buy one share of something, right? You hope for the best. But in this market, $20, right, gets you to the point where you can trade micro lots. And right there, all right, that's one of the most beautiful things about the Forex is it doesn't require a lot of your capital to start trading. All right, you can start small and you grow your account over time. Now, listen, I know all of you that are listening have more than $20. All right, I know some of you got $20,000. Some of you, if you look in your retirement account, you probably got $200,000. Good, leave it there. Okay, you don't need it in this market. All right, and the fact of the matter is, all right, especially if you're new, you want to start small. Why? So you know what you're doing, right? You want to make sure you know what you're doing, that your formula works, that your technique is good, all right, before you go risking larger amounts. But what's going to happen is this, right? If you see your formula works when you're trading micro lots, well, it's just going to be natural, right, that you'll be able to step it out a little bit. And that's when things become a little more substantial, okay? Then you'll step up to mini lots. Now, what does that require? Just $200. All right, $200 allows you to trade mini lots. And again, it'll just be natural that you step out a little bit once you gain confidence and you get to the point, circle this one on your paper, please, where you're trading standard lots of currency. Write that down, put a star next to it, because this is where you need to get to, trading standard lots of currency. Now, how much do you need for that? Just $2,000. All right, so the fact of the matter is, I don't know where you fit on this grid. All right, you're probably trying to figure that out as you go. But listen, gang, understand, none of those is a big number, and it's okay, right? In fact, what I'm going to tell you is this. If you've got $2,000 of trading capital in this market, that's all you'll ever need. All right, now what does it mean, though, in terms of the money part, all right, your takeout? Well, listen, when you're trading micro lots, each of the pips is worth 10 cents. Write that down, 10 cents. Okay, so let's use the example that we did a minute ago very quickly. All right, you made 70 pips on that euro trade. Well, 70 pips times 10 cents would be $7. All right, on a $20 investment. So that would be what? That's a 35% return, right? That's a nice percentage, right? It's not a lot of money. Okay, $7. What can you do with that? You buy a ham sandwich with that. But 35%, that's a big number. And if that's repeatable, all right, if that's something you can do over and over again, well, pretty soon, guess what? You're not going to be trading small for very long. At which point, right, when you get up to when you're trading mini lots, now things become a little bit more significant because each of the pips is going to be worth $1. All right, the trade itself remains the same. All right, you're going to make that same 70 pips on the euro. The trade is the same. But because you started with a little bit more, $200, now you're taking out a little bit more. 70 times it does, $70. All right. But the real reason I want you trading regular lots, standard lots, is right here. When you trade standard lots, please circle that one on your paper if you haven't already, because that's where you need to be. That's where the pips are worth $10 a piece. All right. And you already did the math, I'm sure, right? 70 pips times 10, that's $700 on a $2,000 investment. Okay. And that in itself is the main reason individual retail traders are flocking to the Forex, because it doesn't take a lot to make a lot. All right, $700 a day is a pretty good way to do things. All right, now I know what you're wondering. How often does that really happen? Anybody can say $700. Hey, right, $700. Listen, you need to know how often that happens. Here's the answer. It happens in every currency every single day, and I'm going to show it to you live in the market. Okay, your other question is obvious. What's the downside? Okay, of course I got to tell you that, right? And that's part of the formula. All right, we're going to put this all together so it absolutely makes sense. And the fact of the matter is, whether you're looking to make $500 a month or $2,000 a month extra, right? You want to add $3,000 or $4,000 a month. Some people want to do this for a living. They want to make $8,000, $9,000, $10,000 a month. Great. All right. The average person that comes to my workshop, that's what they want to do. They want to make between $2,000 and $8,000 a month. All right, some want to make a little bit more, whatever, but I could show you how the math works and let you know that those numbers aren't just doable, they're common, okay? But here's the thing. You have to be the one that does this. What do I mean? Well, there's a commitment involved. Well, what's the commitment? Look, if I can show you something that works, I know that you'd be committed enough to do this, right? Anybody says, show me how to make money and I'll be there, okay? All it's going to take you is about 30 minutes a day. Okay, with what I'm about to show you here, you'll see how it works. All right, 30 minutes a day. Now, if you can carve that out, great. If you can't, I don't know what to say other than trading is not for everybody. All right. But if you can carve out 30 minutes a day, if you can commit to that in your own mind right now, then I'm going to do my part. All right. I'm going to show you something that works so that you're absolutely going to be willing to spend that 30 minutes a day. So let's do it. Let's go live in the market. I'm going to show it to you right now. All right. And you'll be able to see it. Now, listen, this is sort of the star of the show. Okay, this is what we call ultimate charting software. This is our proprietary piece. This is a tool that's going to help you, all right, get to where you want to go. This is something that all of our worldwide users already have on their desk. All right, this is something that some of you, I bet, probably already have already as well. All right, every one of the traders here has it on our desk too, so that when we get together in our live trading environments, right, our live webinars, well, we're all looking at the same thing. Okay, now this software is super valuable. Why? Well, why do we have over $1 million invested in the development of this program? Well, it helps our traders because no matter what currency you're looking at, whether it's the euro, right, whether it's the New Zealand, whether it's the pound, whether it's the yen or the Australian, no matter what currency you're looking at, right, no matter what time frame you're looking at, there, look, there's a monthly chart, there's a 2-hour chart, there's a daily chart, 1 hour, right, no matter what currency or time frame, this software is super valuable. Why? Because it answers the 3 questions that you have to answer. You have to answer, right, on every trade that you do. Now, what are the 3 questions that you have to answer? The first one's pretty simple. Which way's the market going? We going up or down? It's a pretty important question. All right. If this can tell you which way you're going, right? We're going up, we're going down. It's beyond valuable. Okay. If it can do just that. But here's the thing. It takes the next step and it tells you where and why to get in the market. And it also answers the last question, where and why to get out. Okay. Now here's what you need to understand about the Forex. Remember I told you this market's different. Okay. It's different because this market, write this down, repeats itself. All right. Unlike any other market, this market repeats itself. All right. This market does the same things over and over and over again. All right. No other market behaves like the Forex market. And you're going to use this characteristic to your advantage. All right. This market does the same things over and over and over. It develops patterns. Now we're going to read the patterns on the chart using these blue and white candlesticks, right? Most of you have seen a candlestick chart before, so I don't need to go into all that. In fact, this is actually pretty simple when you get down to it. When you see blue candles, market's going down. Right? When you see white ones, market's going up. And what do you notice? Market never goes straight down or straight up. It always moves in waves, right? It moves in patterns. Well, I want to look at a couple patterns with you right now. All right. I want to look at a couple patterns. I'm going to call them A, B, C, D. Write that in your notes. All right. The Forex market always moves in A, B, C, D patterns. Let me show you what I mean. All right, we'll start over here on the very left side at this high price. You see that? Let's start there. We're going to call that high price letter A. And what happens? Right from letter A, right from the high price, the market fades, right? Fades all the way down here to a low price. Well, we're going to call that letter B, okay? What happens there? Well, the market was going down, but it stopped going down and it rallied, right? All the way up to a high price. So we're going to call that letter C. So we got A, B, C, okay? Now, here's the thing. There's a piece of software that's built into this program, okay, that can actually read the patterns, okay? What it can do is pretty fascinating, all right? It takes 2 measurements, all right? It'll take the measurement from A to B, okay? Then it will take the measurement from B to C, okay? And with those 2 measurements, it can actually tell you where letter D is. Now, when you're first looking at that, you might think, well, I'm not sure how impressive that is. I mean, if letter D is that low price, right? And your tool can tell me where it is, I'm not that impressed because when you get down to it, I can actually see that low price, right? It's already there. It's already happened. This is kind of a history lesson. So why is your tool so important if it can read the patterns that are already there? And if you're thinking that, good, because that's what I was thinking. We've all seen 100 tools. We've all seen the red light, green light routine, right? We've all seen just about everything. So when someone says it can read the patterns and it shows you a history lesson, it doesn't really impress you. And that's okay. All right, because I want you to keep your thinking cap on. But I also want to ask you this in a little bit of a different way. What if it could read the patterns, A, B, C, D, okay, What if it could, let's say, start here, whether the market's going up or down, it moves in these patterns. So let's say instead of starting at this high price, let's start this new pattern at this low price. What if the pattern started here, right, at this low price A, and then the market rallied to this high price B, okay? And then it pulled back down here to this low price C. Well, what if the tool I'm talking about could take those two measurements, right, from A to B and B to C, and it could tell you where letter D was before it happened? That's a different conversation, isn't it? Right? What do you mean? Well, what if this thing could tell you which way the market was going ahead of time? Would that be valuable? Of course it would. All right. They asked me the same questions when I saw this. When the chief, right, the CEO of the company was showing this to me, he said, do you think that would help you? I said, of course it would, right? If it can tell me where the market's going, sign me up, because I've been looking for that for years. And he laughed and he said, well, what if it couldn't just tell you which way it was going? What if it could tell you how far it was going to go? Do you think you could make some money with that? And I said, well, if it worked, anybody could make some money with that. He said, well, let me show it to you, because that's what this tool does. The tool that's built into the program, gang, can read the patterns, and it can tell you this, which way the market's going and how far. All right, what's the tool called? Because everybody wants to see that. I get to show it to you. It's called the Fibonacci tool, okay? Those of you that know what this is, let me get the new people caught up. All right, the Fibonacci tool, that's what's built into this program. This is the tool that's going to help you. It's based on something called the Fibonacci sequence. All right, let me just give you a little history on this very quickly. All right, who the heck is Fibonacci? Well, there he is, right? Very handsome Italian mathematician. Okay, what makes him famous? What makes Fibonacci famous is this. He came up with a numbering system, a sequence of numbers, all right, called the Fibonacci sequence, that can measure everything in nature. All right, they actually call this nature's numbering system. If you're not familiar with this, when we're done, you Google it. All right, look this up. It's fascinating stuff, because here's what Fibonacci figured out. Fibonacci figured out that everything, write this down, everything follows a natural and predictable pattern, okay? And by putting his sequence of numbers on it, you can measure all of it. Let me give you an example. All right, you see this fish right here? You see this fish? Okay, this fish is made up of scales. Okay, now if I said to you, how many scales are on the fish? You could try to count them all one at a time. But if you put the Fibonacci sequence on that fish, it will tell you exactly how many scales are on it. Why? Because it's a natural and predictable pattern. Okay, works the same way with the sunflower. See that sunflower? Look at that sunflower is made up of petals. All right, now if I said to you, how many petals are on the sunflower? You could try and pull them off one at a time and count them. But gang, that's not a random number. That's a natural and predictable pattern. Okay, if you put the Fibonacci sequence on the sunflower, it will tell you exactly how many petals are on it. And look, this works on everything. All right, this works on everything. It works on architecture. You see that? That's not a flight of stairs so much as it is a Fibonacci sequence. All right, we use it on the human body to measure our symmetry. All right, the length of our arms versus the length of our legs, that's a Fibonacci sequence. The shape of your ear is a Fibonacci sequence. This works on everything because everything follows a pattern that's natural and predictable. And now you might say, well, that's great, right? But what does that have to do with what we're talking about? Good question. Here's the answer. All right, the chief, right, in his wisdom thought to himself, wait a second, the Forex obviously follows patterns. What if those patterns are natural and predictable? In other words, what if we put this Fibonacci thing into the Forex market and it worked? We could make a ton of money. That was his thought. Well, guess what? That's what he did, and it does work. All right, not only did he make himself a couple $1 million on it, but he built this whole company around this thing, this formula that I'm about to show you. All right, all you have to do to make it fly is be able to look at a chart full of candlesticks, all right, and be able to identify the high prices and the low prices. If you can do that, identify high prices and low prices and what we call U-turns, you can use this tool. Okay, now understand, a U-turn on the chart, pretty easy to spot. Anytime you see, right, the shape of the letter U, right, within the candlesticks, the bottom of it is a low price. Pretty simple. Okay, when you see the shape of the letter U but it's upside down, the top of that is a high price. Okay, so high prices and low prices. And all you have to do once you identify those, all right, is draw a line between the two. Okay, you're going to come over here. Now pay close attention. All right, because I'm going to show you what this does. At the end, if you want to try it, I'll give you 60 days to try it so you can make sure it works and it works for you, right? So make sure the formula works and all of that before you have to make a decision if you want to keep it or not. Okay, so pay attention because you'll be able to use this thing today. All right, all you have to do at this point is come up here to this menu that says Fibbo Tools, Fibonacci Tools, and drop it down. The very first thing you see says MTI, that's us, right? Fibonacci tool. I want you to click on it. When you do, look what happens to your cursor. It turns into a pen. Okay, take your pen, just come over here and draw yourself a line from A to B. Now, what just appeared on the screen? That, gang, is the Fibonacci sequence. All right, that's all those fancy numbers that make up the sequence. Now, what's this doing? What's the tool doing right now? It's measuring the first leg of the pattern from A to B, from this high price to this low price. Okay, but what happens when we get down to letter B? The market reverses. All right, it rallies all the way up there, right, till it gets to letter C, this high price. Now listen, you need to be able to spot that because that's going to be significant, all right? Because look at where letter C lines up. You see how it lines up with this red Fibonacci number? All right, you see how it lines up, this high price lines up with that red Fibonacci number? That is going to be significant. Why? Because some people call these Fibonacci numbers energy levels, okay? You know what I call them? I call them trampolines because of the way they act on the price of the market. Okay, when you bump into a trampoline, when letter C is up here, when this high price runs into this trampoline, what happens? Well, what happens when you jump on a trampoline? You go bouncing off in the other direction. Look what happens here. When the market bumps into that trampoline, it goes bouncing off in the other direction. In other words, guess what? It's bouncing off this energy level, and that energy is pushing the market down. So now you know what? Now you know which way the market's going, right? And that is major. And if this is all this tool did for you, it'd be a huge help. But here's the thing, all right? This goes a step further. Not only does it tell you how far or which way the market's going, it'll tell you how far it's going to go. All you're going to have to do, gang, to figure that out is match the color. What do I mean? Well, if you bounce off of a red trampoline, the way that this works is this. You're going to go down and you're going to keep going down until you hit this red Fibonacci number down here. That's where you're headed. That's another part of the sequence. In fact, that's the end of it. If you bounce off of a red trampoline at letter C, you're going to keep going down until you hit this red Fibonacci number, letter D, sometime in the future. And look what happens. That's exactly where the market goes. All right. The market goes all the way down there, right? That's where the sequence finishes. A, B, C, D is a complete sequence. So by knowing where what Fibonacci number or trampoline you bounced off of, okay, you know which way the market's going to go and how far. Now, it all depends on letter C. What do I mean? Well, it's possible, right, that when this market rallied, let's say it rallied, but it rallied higher. Instead of stopping at this trampoline, let's say the market came all the way up to here before it made its U-turn, right, before it turned in a downward direction. Well, that means suddenly letter C is way up here, lined up with the blue trampoline. And the way this works, you got to match the color. All right, if the market bounces off a blue trampoline, yes, it's going to bounce in a downward direction, but it's only going to come down to the blue line sometime in the future. That's just how the Fibonacci sequence works. A, B, C, D. All right, it depends on what? Which trampoline you bounce off of. Okay, same thing here. If the market had rallied even higher, if it had rallied up to the green trampoline, the green Fibonacci number, right, you probably already figured this out. That means the way this works, the market would have continued down, but only down to the green line, all right, A, B, C, D. So the fact of the matter is, the easiest way to remember how this works is what? Red to red, blue to blue, green to green. And I think you can figure that part out. Some of you have seen it before, but for you new people, that's how the trampolines work, okay? So now what? Well, now you want to know that they do work, all right? And yes, I just showed you an example of them working right here, all right? Right here. We went from the red trampoline all the way down to the red line, and that's where the sequence ended, right? Well, what good is that, Joe? Well, that's an example of the fact that it does work, but it is just a history lesson, all right? Now, what I want to remind you of is that this works in either direction. And when one sequence ends, all right, when this sequence came to an end, what happened is the next sequence began right there. Okay, so once you finish a sequence A, B, C, D, then you start over again at letter A. That's this low price. Okay, what happened? The market rallied to a high price. Then what did it do? It pulled back to a low price, and now what? Now it's bouncing. Okay, You see this? The market's bouncing. Now, if you didn't have this tool, you'd probably say bouncing off of what? Okay, but because you have the tool, go get it, use it. It's right here. Click on that tool, get your pen out again, and draw that line from the low price A to the high price B. Okay, and what do you have here? You've got a new Fibonacci sequence. Okay, and what do you see? You see that the market has gone from A to B, and then it pulled back down to this low price. You see that? Well, that's pretty obvious that it lines up with this red trampoline, which means what? This market's bouncing off of this Fibonacci number. So if this works, if this works the way I'm telling you, this should continue until it gets all the way up here to this red line, this red Fibonacci number sometime in the future. In other words, that's where letter D is. Now, it hasn't happened yet. Okay, so what do I need to do? I need to give this a different name. It's not D, hasn't happened yet. So that's future D. That's where we're going if this works. Okay, so what do you need to know? Well, Joe, what's it all worth if it works, right? Show me the money first. I want to know if this is even worth my time. Okay, let's take a look. If I click on this candle, it shows me what? Where we are, my current price, 71.82. So let me just write that down, 0.7182. That's my current exchange rate. Okay, where are we going? Well, according to this, right, if this works, right, we're going to 74.04. So let me write that down, right, 74.04. So if that's the case and this works, what's that difference going to be? That difference here, right, is going to be your profit opportunity. Okay, let's calculate it. Get a calculator. All right, 74.04 is where we're going. 71.82 is where we are. That's a difference of 222 pips. And I want you to write that down. Okay, 222 pips. And let's talk for a second. All right, because why? Well, you've only seen this work once. All right, so I'm not sure how confident you are in doing a trade on this. I can tell you there's 222 pips here, but you know what? You're new, so you might want to sit this one out and just see if it works before you go risking any of your money, okay? Which is fine, okay? But eventually you're going to have to make a decision on trading, right? Micro, mini, or standard lot. That's going to be up to you. But understand, if you did this as a micro lot trade and it worked, okay, you'd have a $20 trade, but you'd make $22 on it, okay? If you did this as a mini lot trade, $1 a pip is what you'd take out of this, right? You'd be able to take out $222, okay? The reason I want you looking at standard lot trades, because there's that $10 a pip, 222 pips, all of a sudden we're having a $2,000 conversation. And that's the one we want to be having, right? But anyway, you look at it, you're looking at making 111% on your money. And I got to believe that's better than your checking account or your savings account or your mutual funds, right? So this is absolutely worth looking at, okay? 111%, anybody'd want to look at that. And you'd want to know if it worked, right? How do you know if it works? You go forward in time and you'll see that it works. Watch this. As you go forward in time, look what happens, right? The market continues to bounce, okay? It continues to move to the upside. It makes higher lows and higher highs. Now, it doesn't go straight up, okay? But the fact of the matter is, look at, if our goal is that red line, all right, hold on. Our goal is that red line, right? And the market continues to bounce off that red trampoline, it should hit that red line in the future because that's where future D is. And look what happens. It goes right up and kisses that line, which means what? Which means you just found the end of the sequence, all right? And it's not D or future D anymore. That's D, okay? You just found the end of the sequence. There it is. And how long did that take you? It took you, let's see, from our entry point, 1, 2, 3, 4, 5 candles. All right, this is a day chart, so it took you 5 days to make 111%. Not too shabby, right? But do me a favor. Now that you know which way the market's going, right? Now that you know what, that where to get in, okay? Now you also have to know where to get out. And that's when the sequence ends. A, B, C, D, that's the end of the sequence. All right, so this is where you have to book your profit. Okay, this is, and look, that profit would look a lot nicer in your pocket than anywhere else, is the way I look at it. All right, you've got to understand that's the time to book your profit. Why? Because the market's going to change direction again. How do you know that? Well, look what happened here, A, B, C, D, right? You got to the end of it, market changed direction. Look what happened just before it, all right? This is no different. No matter where I look at this on my chart, no matter where, okay, I'm going to have A, B, okay, C, okay, so where's D? Let's take a look. Get my tool out, it'll show me. Okay, there's A and B, right? Then what? Market comes down to C, makes this awesome looking U-turn, right? You can spot that. Well, what's it bouncing off of? It's bouncing off a red Fibonacci number. Boing, where's it supposed to go? All the way up to the red one, right? Look where it goes. It goes right to it. A, B, C, D. And as soon as it gets there, it changes direction. Why? New sequence, A, B, C, D. New sequence, A, B, C, D. You've got to book your profit there, gang, because if you don't, what's going to happen? When you change direction, you're going to give it all back. Okay, and the person that doesn't have this tool or this knowledge, what are they doing? They see something that's going up, they're up 200 pips, and what do they say? I'm going to keep it, right? I'm going to be up 400 pips tomorrow. They don't understand how this market works and repeats itself naturally and predictably, so that in a couple of days, they give back every nickel of that profit that they made. You're not going to do that anymore because you have this concept. You're not going to look at a chart the same way ever again because of this concept. What comes right after it? Well, guess what? It's another one of those. A, B, right? C, D, right? Couldn't be any simpler than that. Here's the neat part, all right? You've just done the hardest thing. And if you can see the ABCDs, all right, you're cooking with oil, all right? That's the hardest part. The part that you need to understand is, gang, this doesn't just work on the New Zealand, okay? This works on, here, I'll put this in your notes, okay? This works on all the currencies. This works in all the time frames. Okay, my day traders, does it work on the 1 hour chart? Yes, okay? The best part of this is, we're gonna do a bunch of examples, so you're gonna see that this is all measurable. You're gonna have clarity when it comes to this, all right? That's huge, okay? It's repeatable, okay? That's what makes the formula work, right? What's a formula? Formula is something that works over and over again, or else it's not a formula, right? This is a formula, and it works because of the way the market works. You see that? It repeats itself. That's why the formula repeats itself. But my favorite word in this whole thing is right here, predictable, all right? That's what you've been looking for. Well, you just did the hardest part. You can see A, B, C, D, A, B, C, D, A, B, C, D, all right? Now all I got to do is throw a couple of little vocabulary words, get you talking like a trader, and you're going to have this formula in your back pocket. Can I keep going forward? Some of you are writing down some more notes. Here's what I want you to do, all right? Finish up your notes. I'm going to get a quick sip of water, all right? But when you're ready to go forward and learn the rest of the formula, just type go in the chat box so I know that you're ready. Okay, and I'm going to put a couple of words up here that you're going to have to write down in the meantime, but let me know that you're ready to go forward. All right, just check in with me because I don't want to leave you behind here. All right, you came in here because you want to have some value for your time. You want to have some good takeaways. You're almost there when it comes to this. All right, you're going to be ready to trade this. All right, just let me know that you're caught up so I can show you the rest of the formula. Okay, good, a lot of goes. Thank you. My serious people are here. Appreciate that. Support, resistance. Good, thank you for that. Okay. Awesome, awesome. Luca, thank you for that. Henry, Ahmet, Willem, Nikki, Gavin, Bill, Dan, John. You ready to go? Curtis, you ready to do this? All right, I can see who's following along. All right, here we go. Because I got to show you the entire formula. All right, I got to make sure this makes sense to you. So here's what we're going to do. Okay, this is the formula right here. Write this in your notes. Support, resistance, breakout, sequence, repeat. That's the formula. Okay, now I got to cover all the bases because I got to turn you into a trader now. I got to get you talking like one. I got to get you understanding something that anytime you look at a currency, all right, no matter what time frame you're looking at, you know what you're going to be looking at? A bunch of candlesticks. All right, no matter what chart you're looking at, you're going to be looking at candlesticks. Okay, and the fact is the candlesticks have to tell you a story. What story do they have to tell you? They have to tell you when to push the button, right? When to buy, when to sell. Okay, well, when you bring up a chart of candlesticks, you got to bring that chart alive. Now, I start to do that. It starts to tell me a story when I start drawing trend lines. Okay, some of you know how to draw trend lines. Some of you are brand new. Okay, so let me go through this. I'll draw them for now. All right, you'll get used to it. You'll get the hang of it. Okay, if not, you come into my trading room. You let us do it a couple of times until you do get the hang of it. That's part of being a trader, right, is learning things as you go. But the fact is, all right, trend lines tell you a story. What is this trend line telling me? This trend line is telling me a very clear story, all right? For the longest time, every time, all right, this currency came up to the trend line. What was happening? Well, that trend line, look, was acting, right, like a ceiling on the currency. Every time the market came up to the ceiling, it would sell off. Come up to the ceiling, sell off. Come up to the ceiling, sell off. Do you see that? So what's happening? Well, the market's trying to go up, but this ceiling is pushing back, right? It's resisting. Well, that's what we call resistance. All right, well, yeah, that makes sense, right? Of course it does, okay? But that's gonna be one of the terms that you're gonna hear a lot in our trading room, so I just want you to be familiar with it so you're comfortable, okay? A ceiling, that's resistance, okay? Now I can draw another trend line that shows just the opposite. Look, here's another trend line, all right? Just very quickly, all right? This one is acting exactly opposite of this one, all right? Because what's happening? Well, when the market comes down to that trend line, it bounces up. See that? Comes down to the trend line, bounces higher, comes down again, bounces higher. All right, so what's happening here? Well, this trend line is acting like a floor underneath the price. All right, and what's the floor doing to you right now? Right underneath your chair, right? It's supporting you, it's holding you up. Well, that's what this is doing. That is a trend line that shows support. So now what? Now you've learned what? Support and resistance, floors and ceilings. You see that? You're developing as a trader. You're picking it up quickly. Well, there's actually something that's super important that's on this string of candlesticks, and it's right here. Let me circle it. All right, you see that right there? All right, what happened here? What happened right here, gang, is super important because we expected when the price rallied up to this ceiling, what to happen? We expected it to sell off again, but just the opposite happened. Right here, boom, it pushed through, it broke through the ceiling. That is called a breakout. And I want you to write that in your notes and put it in highlighter because this is what traders are looking for. All right, when you see breakouts, you have to say to yourself, this is my chance to make some money, okay? Because what comes after a breakout, right, is strong moves. And you gotta highlight this, you put dollar signs next to it, whatever. This is what you're gonna look for when you open up your laptop. You pull up your charts, you're gonna look for breakouts, okay? And then you have to be ready to spring into action because this is where the money is made. All right, I'll show you exactly how to do it, but you already have the tools to do it. This is where you break out with what you know, your sequence, your ABCD, right, and your Fibonacci tool, okay? This is where you spring into action. Let me show you what I mean. All right, once you see that breakout, all right, you gotta then, all right, take a look at the candlesticks and find ABCD. Where's A? Well, it's at the low price. Let's start it right there. Here, I'll magnify this a little so you can see it. All right, exactly what we're talking about. That low price. You see it? That's gonna be A. What happens? Market rallies to a high price. Well, that's gonna be B. Okay, now you got A and B. What happened here? The market hit letter B and then it pulled back down to a low price before it did what? Made a U-turn, okay? So now what did you find? Well, you found the bottom of the U-turn, that's letter C. So the last question is, where's D? Well, go get your Fibonacci tool, you already know how to do it, and you draw the line from A to B. There it is, okay? Pretty obvious, right? The market has done what? It has bounced off of a red trampoline. See how it lines right up to it? That's significant. All of these numbers are going to be significant. You'll learn what all the details behind the Fibonacci numbers are as you go. But what do you need to know for now? You need to know that the way this works is the market's going to bounce from red and go to red. If this works, that's what should happen. And look what happens. That's exactly what happens. And it completes the sequence right at the trend line. A, B, C, D. That's a natural pattern. And you're thinking, great, but what good is that? Joe, the sequence is over. You said I was going to be able to make some money with this. What good is that if it's already happened? Good question. Here's the answer, okay? You've got A, B, C, D, and it's going this way, okay? So you've confirmed that the market's going up. Now you got to add the last piece of the formula. It's my favorite word, repeat. This is going to happen again and again and again and again, A, B, C, D. All you have to do, gang, is draw another sequence. Now watch, okay? You got a low price here, don't you? That low price, see? That's in the old sequence, okay? But that becomes the new A, all right? Old C becomes new A. You're gonna roll your energy forward. That's your low price, okay? Where's B? It's at that next high price. Here it is, letter B, okay? What happened? The market pulled back down to a low price, made a U-turn. So guess what you just found? You just found letter C, okay? So now what do? Well, now that you got A, B, C, you draw your line again. A to B, there it is, okay? And now what? You've got the market pulling back down to this low price, which lines up with another red trampoline. If this works, we're bouncing off of that, and we're not gonna stop till we go to 141.99, all right? So this is your profit opportunity right here. This is where letter D is, okay? If this works, that's where we're going. Now, where are we? Even if we get this lousy entry price at 140.62, okay, we go to 141.99, call it 142, right? That's 138 pips, okay, 138 pips. Now, I don't know about you, okay, but at this point, you've seen it work a couple of times. So maybe you're ready to do a micro lot, mini lot, standard lot. That part's going to be up to you, okay? But the fact of the matter is, no matter what size you do this in, okay, this is still going to be 69%, okay? And this is a couple hours chart. So if this works, that's where we're going. So what do you have to do to get it? You got to buy low and sell high. This is where you buy, okay? Right here is where you buy. Now you might say, well, Joe, that's easy for you to say, right? You're shouting buy at all of us, right? But this isn't your money, Joe. This is our money, right? So what do you need to know? First, you got to know how to buy it, right? Here's what you're going to do. If you're going to buy something, you at least have to know how, okay? And that means you're going to come over here to the trading button, and you see this, you got a buy button and a sell button. All right, what's going to happen is this. You're going to link your broker account right to the software. Now, we're not a broker, okay? We're not going to hold your money. You got to open an account with a Forex broker, just like you did when you opened up your Schwab account for stocks, just like you did when you opened your Think or Swim account for options, right? Or E-Trade or Ameritrade or one of these, right? In the Forex, you got to open your account with a Forex broker. Now, who are they? Well, the biggest one is Forex.com. Go ahead and write it down. Don't go visiting their website yet, all right? You do that at the end, okay? But the fact of the matter is when you visit their website, it'll take you 3 minutes to open an account. You give them basic information, right? You download their little platform. You can download a demo account today, take you 3 minutes to do it. All right, there's another one in Canada, worldwide broker called Oanda, O-A-N-D-A. You can write them down too, give you a couple of different ones to look at. But what's going to happen is you're going to link that account that you have right to the software. When it comes time to buy, you click on buy. Right? You decide 10 cents a dollar or $10 a pip, and then you go. You're a buyer. You're in the market. All right? So go ahead and do it. And I know what you're thinking there too, because a bunch of you have already asked about it. What's the downside? Any idiot could say, do you want to make 69%? And of course, we'll all hold hands and say yes. Okay? But you want to know what the downside is. Because why? That's a trader's question. You have to know that before you go doing anything. And good for you. Because what do you know? You know that the second you buy something, right? Everything down below it immediately becomes risk, okay? You don't like risk, we don't like risk, okay? If this thing goes up, that's all great. But if it goes against you, look, this thing can fall off of a cliff. So you wanna know how the downside is protected. Well, that's the last part of the formula. If you write this down, you're gonna have this thing in your back pocket, all right? The last part of the formula is this. At the same time, the same instant you buy anything, you're gonna protect your downside with what's called a stop order. All right, write that down. Stop order builds a floor underneath your trade. So that what? So that if it goes against you, right, your downside is protected. All right, it limits your risk. Well, in this market, okay, wherever you build your floor, here, I'll show you what it looks like. All right, wherever you build your floor, that's going to limit your risk. Okay, in other words, yes, we want this to go up. We want it to go all the way up and not stop till it hits that red line. But if it should go against us, once you build your floor, okay, you've mitigated all of this other risk, and that's the worst case scenario. That's the worst that can happen. If it comes down to your floor in this market, you're out automatically, okay? Automatically, right, because it's a purely liquid market and it's open 24 hours. So if your floor gets hit, you're out, and it'll protect the rest of your account. You know what that's going to do for you? It's going to get rid of the sweaty palms, okay? It's going to help you relax. Once you build that floor, you're protected. You can leave the house. You don't have to sit there and stare at it. Go cut the lawn, go listen to the ball game. Okay, go drive your kids to school, go to the store. You can live your life in this market if you've got a stop because of the way this market works. In the stock market, if you have a stop, the market closes, right, gaps down the next day, guess what? You get the gap down price. There's no liquidity there. The market was closed. You understand that? The reason you want to be trading this market is because of this. Now, having said all of that, I don't want you just placing your stops any old place arbitrarily. All right, there's going to be two places that you're going to place your stops if you're going to trade this market based on the kind of trader you want to be. All right, you're either going to be conservative or aggressive. Okay, now about 80% of the traders that we work with, conservative traders. Okay, well, that means what? They're going to place their stop at a very specific place. They're going to place their stop way up here at letter C. All right, C for conservative. Okay, they want to risk as little as possible to make as much as possible. Okay, that's what a conservative trader does. Most of the time, that's what I do, right? And I'm taking advantage of sort of how the patterns work, all right? That is a very appropriate place if you're conservative to place your stop. Now, other traders, all right, are going to be aggressive traders. Well, that means they're going to place their stop in a little bit of a different place. They're going to place it all the way down here at letter A for aggressive. Now, why would they do that? All right, why would they put their stop all the way down there? Isn't that much more risk? Sure it is. You can see it right there. But this is an aggressive strategy. All right, they're willing to risk a few more pips. They're going to adjust their trade size based on that number of pips. But the reason, now listen carefully, the reason they are willing to put their stop all the way down there at letter A is because they know something that you don't. But I'm going to tell you what it is that they know. You got to move your pencil on this one. Make sure you write this down. My aggressive traders put their stop down here at letter A because they know that if the market, right, pulls back, all right, it pulls back from letter B, pulls back all the way down, but if it does not break below the A, okay, if the market pulls back, but it does not break below the A, all right, this is what my aggressive traders know, and you've got to write this down. Let's finish the sentence. All right, it has no choice but to go your way. It has no choice but to go your way. Why? Because of the natural order of things and patterns in the universe. If the market pulls back, gang, and it doesn't break below the A, that means not only does it have to U-turn, but it has to complete the sequence A, B, C, D. In other words, it has to go up. And you're going to see that and you're going to learn that. And the more you test that, the more you're going to see that that works. But at this point, you know what? All you want to know is, all right, Joe, I'm protected. I put in a stop order. Is this thing going to go to that red line? Well, all you got to do at that point is go forward in time and you'll see it. Now, it doesn't go straight up. Boy, we wish it would, right? But it continues to make higher lows and higher highs until it kisses that line. And that's A, B, C, D. And guess what you just did? All right, you just made yourself 138 pips. How long did it take? One, and with that lousy entry, 1, 2, 3, 4, 5, 6, 7, 8 candlesticks times 2 hours. That took you 16 hours. All right, with a $2,000 investment, $1,300 in a day would not be the worst thing in the world. But do me a favor, please. If you're going to do this, you have to realize, okay, that when the sequence ends, it's time to go. All right, the rookie trader counts their money, right? They call 3 friends, they start bragging about it, and what happens? Well, the thing starts going against them pretty quickly because why? They're on another sequence. Be a pro, number 1. Take your profit when you're supposed to. But number 2, recognize that this thing is going to repeat again and again and again, okay? All you have to do at this point with what you've learned, right, is recognize that that old C, gang, becomes the new A. All right, you've got to recognize that that old D, right, that high price becomes the new B. Okay, you've got it. Let me just go ahead and eliminate these couple of things because this is now old news. This is an old buy. That's done. Okay, but now we got a fresh set of Fibonacci's. All right, now what are you going to do? Right, even if you're new at this, you can draw that line. Okay, even if you're new at this, you can wait for letter C. You're waiting for the next U-turn. Now, there's a little bit of nuance in doing this, right? When you see a U-turn, for my new people, you know what I tell them? Wait for the most obvious one. Okay, it might not be the best entry in the world, but the fact of the matter is it'll be the easiest one to spot, so you're not guessing. Wait for the candle to close and give you a nice strong U-turn, and that's where you find letter C. All right, so I've got a nice strong U-turn right here. I don't think there's any doubt about that, and I don't think there's any doubt that that's the new low price. So that's going to be my letter C right there. All right, now if this works, okay, what should happen? All right, we should be going from C up to D. All right, and at this point, you know what I think? I think we've been together long enough that I think you want it to work. I think you want this to go from C to D because you've been trying to find something that gives you all this clarity so you can push the button and have it make sense. Well, if this is at what? Let me look, 142.22, and this is at 143.97. That's 175 pips. All right, 175 pips. That's even better than the last one. That's 87% on your money. You're right. I'm not going to even ask the question, how many of you want to make 87%? It's all of you. Okay, do me a favor. All right, yes, you're going to push the button, and at the same time, you're going to be protected. Whether it's at C or A, I don't care. Make sure you've got your protection, and then what? Then you wait, right, for higher lows and higher highs. Whoa, what's happening here? Nothing, right? We're still bouncing. We're still bouncing off that trampoline. Okay, we're still making higher lows and higher highs, right? Until we get to what? Until we kiss that line, A, B, C, D, 175 pips. How long did that take? Even with this lousy entry again, it took us 20 bars, 2 hours, 2 days. Okay, so I've just shown you how to make more than 300 pips. Okay, and even in the time here that you weren't trading, all right, we got to count that time. So let's say that this was about 300 pips in a week. That's on a standard lot, $3 grand. Okay, if you're adding this to your stock trading, you want to do this separately, great. If you want to meld over from some other kind of trading, you're doing some futures, you're doing some commodities, you want to do this also, you'll be able to fit it in. Trade commodities when it's open, okay? Trade this later on, whatever, but you can add to your flock, to your stable of trading tools, right? And you don't need a lot of money to pull this one off, okay? Now, here's the thing. I know I'm showing this to you, quote, in the past, okay? But I've shown you that it continues to repeat itself, A, B, C, D, A, B, C, D. Look at, we're ready for another one, A, B, C, D. Now look, this is one that I really want to show you, kind of the last thing I'll show you. Then I'll give you a couple of trades you can do right now, okay? But the fact of the matter is, this is A, B, C, D. And what would we expect? Well, we'd expect this thing to start again, right? This would be, right, the new A. And this up here would be the new B, right? And then we'd wait for what? Then we'd wait for the pullback to letter C. But look what happens. The market doesn't just fall, okay? It sort of starts falling apart. Now I want you to see something here, all right? What's happened is this. Market starts falling apart. We went from a pretty well-defined measure of support. See that? Support, support, bounce, bounce, bounce. All of a sudden, what's happened here? Well, yes, the market pulled back, but it also broke down. It broke down through that level of support. Well, that's called a breakout, right? When it breaks the trend line, you got to be paying attention. Why? Because that's when a strong move is going to happen. It's your chance to make money. Remember, I told you that. Well, this is where you break out with your sequence again. But instead of looking to make money in the upward direction, now you're going to look to make it in the downward direction. And look, gang, it's going to be the same thing. All right? It's going to be the same thing. You're going to have high price. You're going to have low price. You're going to have rally. A, B, C. Now watch. All right, all I got to do is put this on here, A to B, okay? And the market rallies all the way up to this high price, right to what? The green trampoline this time, okay? The green trampoline. Now, if this works, if this is supposedly going to work in both directions, that means the market's going all the way down to this green line in the future. This is now where D is. Now, what's my current price? Let me make sure this is a U-turn. All right, it is. That's a U-turn. All right, I'm not going to cheat and give you the best candle. Let me just make sure this is a U-turn and say 142.33. Okay, well, if we get down to 139.69, let me just measure that out. That's probably about 250 pips, right? 264 pips, okay? 264 pips. Okay, if it works, that's where we're going. Protect yourself, set your stop, be conservative, set it at C. You're protected. Okay, if it goes against you, you'll be out, protecting the rest of your account. But look what happens, okay? I already know what's gonna happen. No matter where I put this on the chart, this is how you're gonna read charts from now on. You can't look at them differently anymore because this is speaking to you. And the market doesn't go all the way down to that green line, right, by mistake. It goes down there to complete the sequence. There it is again, A, B, C, D, A, B, C, D, all right? So now what? Now we're gonna change direction and do it again. What do you mean? Well, we got a breakout. Look, it's all the same. It's all the same. A, B. A, B. U-turn. C. Red line. Red line. Reverse. That's how the market works. Okay, so now that you've got this, can you see yourself doing this? Can you see yourself at least putting this on your desk and giving it a shot? Because at the end of the day, gang, you're not going to be looking at anything different. It just keeps on repeating itself. Breakout, breakout, breakout. All right, this is what you have right this second. This is your set of candlesticks, and this is in real time. Now, what do I see here? You know what I see here? I don't really see a breakout. In fact, if I draw my trend line, I'll do it quickly with a smart trend line, right? I just go for the highest price there. That's my current trend line. So I really don't have a breakout. I'm in this sort of downward push, this sort of downward zone. All right, now I've had several trades during this time, all right, that fit my Fibonacci pattern. I've certainly had at least a couple of them, all right, and I've had a couple of trades within these boundaries, all right, but I don't really have what I would consider to be a great trade right now on the Great British Pound, Japanese yen, and the reason for that is because we're waiting for tomorrow. We're waiting for tomorrow when what? This thing bursts through there, okay? And we get that pound breakout, right? This is what you're going to be poised for. When this breaks out, okay, and you get that kind of movement, you're going to be poised to take advantage of it. So it hasn't happened yet. I'm not surprised. So what do you want to do in the meantime? Well, how about we go look for a different one? How about I look for the Australian US dollar? I've got a breakout on that that's happening right this second. Okay, I can identify the low price. What am I waiting for? I'm waiting for B, C, D. Okay, so put this one on your paper because this one is setting up now. We've broken out. Okay, it's still maturing. All right, you don't want to jump in just yet. You want to wait for letter C, find where, okay, find where that Fibonacci pullback is going to be. All right, and then you'll be ready to take advantage of this from C to D. So put Australian on your paper. That one's not ready yet either. Give me one that is, Joe. Give me a trade. You promised me a trade. All right, let me look at the Euro Australian. Now that looks pretty good. All right, this looks like we got some strong potential. Why? Because I've got a trend line that's been broken. Right there's my breakout. And look at here, I'll put my smart Fibonacci on it. It'll show you. We've already had one trade, two trades, A, B, C, D that worked. All right, now what are we doing? We're waiting for the next U-turn, see which one we bounce off of so we can go to C. And again, not a great one to enter right now. I got to find you one. Ah, look at this, the Euro. That's the monthly. That's beautiful too. Love to show you that, but that's the monthly chart. You don't want to wait for that. Pound New Zealand, that's getting ready to break out. How about the Euro Yen? How about the Euro Yen? I think I can live with that because why? Yeah, I can definitely live with that. Watch this. Here's your trade. Bang. Look at that U-turn. I've got A, I've got B, I've got C at the blue line. And now I've got this U-turn. This is your trade because it's got almost no risk. We go from blue to blue. That's 120.51. So that's 51 and 14. That's 65 pips on the 1 hour chart. That's not bad, especially when you consider that the risk is only going to be down to letter C. All right. So look, you've got minimum risk and you've got nice reward. All right. This is almost no risk at all. And if I can show you how to do that with a one lot trade, that's a $650 trade. All right, so please don't tell me I wasted your time today because look at how quickly you were able to do that. But the fact of the matter is, gang, all right, when you get this on your desk, this is the repeatable exercise, okay? And you're ready to do this, all right? If you're thinking, well, I'm not quite sure I want to run through it again, the checklist is built into the program, all right? This is designed so you can get this on your desk today, go through the checklist. If you get it right, it'll let you know, all right? The checklist will let you know that you got it right. It'll show you. You got an 85% chance of making money on this one. Well, maybe you do that trade. You understand? If that one comes out and it says 25%, even the chief will tell you, either you missed a step or that's just the wrong currency. Go find another one. But what happened? I went through 3-4 currencies in a row there. You followed every step. So you're ready to do this. And the fact of the matter is, there's a lot of money waiting for you. All right. And now I think you're ready for this conversation. So here's what I'm going to do. All right. I'm going to let you have it. Now that you're ready for this, you're going to tell me if you're ready to be in Josh's room tomorrow, okay? Because I'm going to let you hear from him right now. What I want you to do that's most important is while he's talking, take down a couple of good notes, write down the currency pairs, take down a what do you call it? A screenshot of what he's about to show you, because these are probably the best assets you're going to get today. So here, let me let you hear from Josh Martinez, then I'll tell you how to get in his room tomorrow. All right, here he is. And good for you. You worked so hard. This part right now is the payoff. Here it is. Make this connection real quick.
Hey everyone, Joshua Martinez here. We're going to talk about the pound breakout prediction. It's a trading opportunity that could be worth upwards of 13,000 pips. With the mini lot, it's about $13,000 return. With a standard lot, it's a little bit over 130,000 US dollars. Now, when I look at this opportunity, I look at it as a weekly income producer, right around 500 pips a week. What I really like about that is at a mini lot, which is just a $200 investment per trade, 500 pips a week could be worth $500 a week, $2,000 a month. So it's fantastic income. With a standard lot investor, it's around $5,000 a week. But before we get ahead of ourselves, let's go ahead and and show you the risk disclaimer. It just means there's risk involved in trading the Forex market. You should never invest money you cannot afford to lose. Always keep equity management in mind. Understand that we're not CTAs, which stands for Commodity Trading Advisors. Okay, so the 4 currency pairs which I'm looking to trade off of are the pound yen, pound CAD, pound Aussie, and pound NZD. Let me go ahead and give you a nice little high-level view. Now, what's neat about these trading opportunities are what's considered year makers. And they have the opportunity to produce income throughout the entire year. And I know that we stated that there's about 13,000 pips to be had, but that's just like the short-term move. The long-term move is much more than that. And the reality of this is a pretty rare opportunity because we haven't seen moves like this. And it takes like about 5 to 10 plus years to get trades like this. Now, what I mean by that is this is the pound yen. This is the monthly time frame. Since 1993, the market's bounced between bottom blue level, top blue level, bottom blue level, top blue level. This is the 4th time since 1993. Over 20 years since the market over 20 years the market has held. And so the fact of the matter is we already broke the down inner counter trend line. We've already tested and we formed a level of support. And what that just basically means, this red line represents an area of U-turn. 1, 2, 3 months of U-turning. Now we've touched it. Arguably, we're starting to form tweezer bottoms, which means this market's getting ready to rally. The fact of the matter is, if this market begins to rally towards the north and goes all the way to the top, we're talking about 8,000, 9,000, almost 10,000 pips of directional upward movement over the next year to 2 years. Now, what's neat about that is, think about that, 10,000 pips. If you were to buy this with a $200 investment, that's $10,000 in return. If you were to buy this with a standard lot or an average investment $2,000, it's $100,000 in return. Now, if you think about that, you know, if you know that you're going to be buying a house the next 2 to 3 years, if you know that your roof needs to be changed, or if you know that your children, maybe they're in high school and they're getting ready to go off to college, or maybe your daughter just got engaged, think about this. You buy this with a standard position, you know, maybe 2 lots, and you make $100,000 to $200,000 in return in the next 1 to 2 years. Now, what's neat about this is that we're going to be able to break this down at the smaller time frames and show the strategic weekly and monthly entries and weekly and monthly opportunities. We're going to be covering this every Tuesday at 7 p.m. Eastern time in-house. So either myself or another master trader is going to be doing it. Now, here's the pound CAD. The Great British Pound Canadian Dollar created a very beautiful range where it touches the bottom blue level, the market rallies, touches the top blue level, market falls. If you know about Fibonacci's, then you know that we love to utilize them here, and they're very strong. If this market were to break the support level, we'll expect this market to fall all the way down to the 1.618D extension. That's about a 4,500 pip move. If the market bounces that support and rallies towards north, it's about a 3,600 pip move. Realistically, we don't really care if the market's going to either break bullish or break bearish. We just need the market to break out of this little box. This is what we're calling this our pound breakout, because on the Great British Pounds across the board, you can see that we've created these little ranges. And this is the pound Aussie. There's a little range, and the pound Aussie is same exact scenario as at the bottom support. It breaks bullish is 4,700 pips. That's over $47,000 of the standard position. If it breaks bearish, heads to the D extension, that's over 4,900 pips. At a mini lot, it's almost $5,000 in return. And then our last but not least, the pound NZD, very, very clean currency pair. This one is postured to go up big time. Even if it does fall bearish towards the D extension, we'll still expect it to rally, bounce up towards the north. So this is a really great currency pair as well. So hey everyone, you know, this is Joshua Martinez. I didn't want to make this a huge drawn out video. We get into the details of the trading opportunities inside our Tuesday night presentations. Actually, in our client only presentations, we monitor these on a weekly basis. We show entry, stops, limits. We explain what the step-by-step process is, how to appropriately manage the trades. Thank you so much for the opportunity. And on that note, every day, helping traders find a way. It's Joshua Martinez out.
All right, and a couple of you have asked me, give me a couple of trades. Well, I gave you a couple for today, but this is where the rubber meets the road, all right? And an hour ago, you weren't ready for this, but now you are, all right? So take a screenshot of that, because the way I add that up, there's about $100,000 on that screen, all right? And regardless of which direction the pound breaks tomorrow, he's already poised to take advantage of that. You understand that? So what I want you to understand is he's going through this at 7 o'clock, okay? The move is happening tomorrow. Now, you're ready for that at this point in terms of knowledge, okay? But you got to get the tool on your desk and mess with it a little bit so that when you get into that room tonight, instead of fumbling around trying to figure out what button to push, okay, you're capturing what it is he's telling you so that you're ready to take advantage of what happens on Wednesday. So let's do this. Let's get this on your desk. All right, all those auto tools are going to be included with the program today. All right, we'll get you a username and password so that you can get this on your desk right now. If you need to go through it one more time, because I know I moved quickly, I have just a limited amount of time to get through all this, but understand, I got through all of it. If you need to review it, you're going to go right up here to the education button that's built into the program. What you'll do is you'll put in the username and the password that we give you today, okay? And then one click away, all right, is going to be what? The chief showing you everything I showed you already. All right, this is what's built into the program, and it's broken down into little lessons. All right, what's the Forex? We already did that. Okay, the support and resistance, that's those floors and ceilings. We did that too. Then we started drawing out the ABCDs, right? Uptrends and downtrends. We did all this. Where to put your stops. Now look, there's a video attached to each of these segments. It's the same person that taught me is going to be showing you this again on the video. And maybe what you do at that point is that's where you call your spouse, or you call your neighbor, or you call your brother-in-law, or whoever you want to trade with, and you say, come on over to the house. I want to show you something. Right? And then you sit down and you go through this together. The beauty of having videos is that you can press the pause button while you're writing down your good notes. Then you press play and you keep going forward, okay? All of this, Japanese can't, we did all this, right? But that's built into the program. Now, normally, all right, this is $249 a month. But if you want to get this on your desk today, all right, and try it out and test it out and make sure it works and make sure that it works for you. That's the most important. All right. Anybody that gets on this team today, I'll give you the software for 2 months for free. So you can do just that. But at this point, you got to respond. All right. I need to know if you're interested in this at all. All right. What I need to know, have you do at this point is what it says on the bottom. All right. Give me a good way to reach you, because at the end, right, when we break, I'm going to reach out to you. Okay, I'm going to reach out to you. We'll get this on your desk, the username and password. We'll dot I's and cross T's. Either I'm going to reach out to you or one of my traders is, all right, one of my education specialists, and we're going to make this happen for you, all right? And because I've got how many people? I got almost 300 people here, all right? The most democratic way that we found to do this is kind of a first come, first call situation. All right, and your best opportunity to kind of get this is to sort of be first in line. So in the chat box, just give me a good phone number to reach you. Good, Charlie, I've got your number. Thank you. Royce, Alvaro, Alan, Nick, I've got your number. Nick, 406 area code. You're in Montana. Appreciate it. Anthony, Winston, Pedro. Good. Yeah, put your number in the chat box so this can get on your desk and you can get this today. Okay, because tomorrow's not going to wait for us. All right. Yes, you got questions. We'll get them answered, of course. Okay, if you didn't get the formula, look, I'll put you into a class so that, you know, a full day class so that you can learn that formula. If you're going to trade with our group, you have to know it. That's what we do. That's what we've been doing for 23 years. Okay, so one way or the other, you got to have that formula so that we can get out there and do step 6. That's my favorite one, right? Apply your training. That means let's get out there and trade, right? Let's go make some money is what that one is. All right, are other people doing this? Look, I can show you testimonials all day long. We get them every day on our Facebook page, right? People that were new are now consistent. People that were new, the formula works. They make a few pips right out of the gate. All right, but if you want to work with that guy that you just heard from, Josh, live, or you want to work with our master traders, what's going to happen is you're going to have the opportunity to mirror and match what they do so that you can capture some of this. All right, 400 pips, $1,000. This guy here sent us his account statement, for God's sake. Okay, thousands of people have already made this decision. All right, they tell us every day, all right, how they're doing. And the fact of the matter is that's what I want for you too. All right. So this is called the Ultimate Traders Package on Demand. This is the most comprehensive, all right, easy to use formula for trading the Forex market on the planet. Let me tell you all of what's involved when you become a student here at MTI. First of all, it's lifetime education, okay? It never goes away. So you're gonna have unlimited access to this for the rest of your life. We have live events that we do every couple of weeks. You can do them here in Orlando live, or you can do them right there live on your computer, all right? These live classes are free once you're on board as a student, all right? You can do them as many times as you want for the rest of your life. Of course, you're gonna have that online tutorial that I just showed you. That is 24/7 access. And there's an app for it. so that you can literally carry this around. You can carry the Chief around on your iPhone, right? Or in your purse or in your pocket, which is really, really cool. Okay, of course you get the software, you get that downloaded today. It comes with all the automation that I showed you. And here's the thing, all right, I didn't have time to show you all of this, but your next step is actually built in here as well, because part of the automation is this. We'll show you what buttons to push so that instead of you having to be looking at all the charts for the breakouts, it will actually look for them for you, okay? And when it finds one, it'll send you a text message so that you could be dropping your kids off at school, or you could be at the grocery store, you could be living your life. And when you get that text message, hey, the yen is breaking out, well, then you know what to do. You can go right to your account, A, B, C, D. Do you see what I mean? This is how you start replicating your success. The checklist, you're gonna use it today to make sure that you've got this before 7 o'clock tonight, but then we're gonna go trade it live. That's where the rubber meets the road. And this really, gang, is the difference between our group and everybody else's. This isn't, here's your software, good luck to you. This is, we'll trade with you 2 or 3 times a day, every day, all week. All right, one of those is gonna fit your schedule. You just look at the schedule and say, you know what, I'm trading on Tuesday at 5. I'm trading on Thursday at 1. You see what I'm saying? And then you log in and you can trade with us. All right, the Chief is gonna give you 2 opportunities a week to directly contact him in live sessions, so that if you have a question and you want to, if you're the type of person like me who wants to get the answer from the top person, don't give me somebody else, give me the top person. Twice a week, you're going to have direct access to him. And no matter when you trade this, you're never going to trade it alone. All right, we're so confident this works. We're so confident that you can do this, that here's what we're going to do. We're literally going to give you the entire program risk-free for the next 60 days. This way, you don't just have to sit here and take my word for it. You take it today, all right? You put it on your own computer, and then you decide if this is the right program for you. All right, all that we ask is that you give it an honest effort. And when you get down to it, the value of this is just massive, all right? In fact, if you add up all of the different components of this, the software, the training, the mentorship, the live trading, the development, all these different things, if you add it up, right, the value of this program is $14,000, right? And it's awesome. But here's the thing, all right, there's a couple ways for you to get started today. And no, it's not $14,000, right? That's the value that you'll be getting, okay? But there's a couple of 3 ways you can get started today, all right, no matter what. One of those is going to work for you, all right? And I can save you a ton of money. Watch this. One of the ways you can get started, all right, is you can go to my website, write this down, markettraders.com. If you go there, you'll see the value of the program. You'll see the whole thing right there in front of you. But what we did on the website is we bundled everything. All right, when you bundle, it just makes sense. Everybody saves time and money that way. Well, in this case, you can go to my website whenever you want, all right, and you can get this as a bundle, MasterCard, Visa, American Express, or Discover, all right, and it's not $14,000. The bundle is about half of that. All right, $79.95, you go online, you get it anytime you want, you have it for the rest of your life. That's great. So why did I just put a big line through it? Because right now we're gonna do it different, okay? At Investor Inspiration, we're gonna do it different. For the time you just spent here, this was valuable time for you. You got 2 full pages of notes, you're ready to get started, right? And we know this was valuable. It was valuable to us too. And what we normally do is we discount this, all right, a couple of $1,000 because you were here today, but we're gonna go even further than that because we want you to be a part of what's happening tonight and tomorrow. We wanna give everybody a chance to do that. So what we're gonna do today is this. We're gonna take this down $4,000, meaning you can get started today, all right, for a one-time investment of $39.99. That's half off the online retail for the program. Okay, and there's a couple ways that you can even do that. What I need you to do though right now is this. You want to get started, you got to type your phone number in the chat box. Okay, one of my traders is going to reach out to you. We're going to spend as much time with you as you need. All right, we're going to make sure we answer any and all questions that you have. And then folks, listen, you're off to the races. All right, the only problem you're going to have with this program is you didn't see it 6 months ago and get started then. All right, now Michael just said, do you have a payment plan? Good question. In fact, yes, we do. Okay, that's going to allow you to get your foot in the door by just putting a small amount down. And what we'll do with the rest of it, Michael, is we'll just spread it out over time. We can do that as a pay-as-you-go thing. Okay, so at this point, right, Robert, I've got your number from a minute ago. William, I've got your number. All right, if you typed your number in a little earlier, you want to confirm it now, that's fine. Robin just said payment plan. Robin, that's perfect. We're going to make sure it fits your budget. All right, we're going to make sure that you're comfortable with this. Listen, Robin, if you're not comfortable, I don't want you to do it. So we're going to have that conversation just as soon as we break. All right, Marty, I've got your number. Darren, I've got yours. 7 o'clock tonight. You're going to be ready for that. Okay, now let me tell you exactly what's going to happen. All right, and I'll give you a little additional value also. All right, I think I said at the beginning, 2 months of charts for free. I'm going to do better than that. All right, today I'm going to plan for your success, and I'm going to give you 6 months of the charts for free. I'm going to add those, okay? Because I don't want you worried about $249 a month. I want you to learn that formula. All right, my day traders, listen, I know you want to trade the 10 and the 15 and the 30-minute charts, and I didn't have time to show you the Turbo Trader. That's a day trader's helper for this program. So here's what I'm going to do. I'm just going to add it. Okay, normally that's an extra $1,000. I'm just going to add it. Everybody's going to get it, but day traders will show you exactly how to use it. That's going to help you when it comes time to doing those things that move a little bit quicker. All right, you go live with Josh, and in fact, if you do this as a one-time payment, I'll give you a year of the charts today. So here's what we're going to do. There's $4,000 in value, and now I really need to hear from you. All right, some of you already told me you want to do a payment plan, and that's fine. All right, some of you, I'm sure, are going to be able to do a one-time payment. Listen, if you're leaning towards doing a one-time payment, all right, and you want to save that immediate almost $4,000, right, and get a year of charts, here's what I want you to do. I want you to type the letter A in the chat box, the letter A right next to your name. All right, now understand something. If you type in the letter A, I'm not saying that you're immediately committed to this right now, this second. All right, we're going to help you. Okay, all you're saying is that if we get your questions answered, all right, we show you the warranty, right, and this makes sense to you, that you have the ability, or you can find the ability to make a one-time payment. All right, so please only type A if you're in a position to do that. Whether or not you do this yet, that's still to be determined. Okay, now on the other hand, I want you to type the letter B if you think you're more likely to do this as a payment plan. Now listen, with the letter B, right, all you have to do is put a small amount down. Okay, that gets your foot in the door, and that still gets you the whole program. And what we're going to do is just spread the rest of it out over time. But either way you do this, gang, listen, you got 60 days, okay? Because we want you to use the program, not for 10 days or 15 or 30. We want you to test this out, all right? We want you to test drive it. Not only that, we want you to learn all that you can. In that 60 days, you're going to come to the class. You're going to come trade with us, all right? You're going to go out there and trade with us live a couple of times every day. And at the end of 60 days time, after you've used it and seen that it works, that's when you're going to make your final decision. And it's going to be easy at that point. If it works the way I said, you're going to keep it, obviously. All right, you go forward, you're a trader with us for the rest of your life. That's how it's supposed to work. But look, if after 60 days, okay, you decide for whatever reason, you know what, that Forex is cool, but it's just not for me, it's okay. What our warranty says in writing is that we'll refund every penny that you paid for the program just for giving it a try. All right, what am I trying to tell you here? Option A or option B, either way, your downside is zero. All right, your upside, though, is phenomenal. Your upside, I mean, at the very least, you're going to get a full education out of this. You want to go to a 2-day training class? Guess what? I got one coming up. It's this week, all right? And the fact is, by the time you're done with that, you're going to have these strategies in your back pocket. You're going to know how well this program works, all right? And you'll be able to do it. Think about it. Think about what you learned from me in an hour and a half. You spend 2 days with us, you're just going to plain have this. Now, if you can't make this one, it's okay. All right, we're going to do another one of these next week. But if you want to get into the training class right away, all right, I can still let you do that. You just got to let me know that that's something you want to do. So it's either option A or option B. All right, now who's letting me know that? TJ, I've got your number. Brett, I've got your information. Chris, there it is. All right, how much is it after 1 year for the charting software? It's $249 a month, Chris. All right, but that'll be included today. But if you want to do lifetime charts, that's also something that we offer. All right, so let me go down the list here just very quickly. Zane, I've got your number. Wyatt, I've got yours. Todd, I've got yours, option B. Terrence, I've got yours. Maybe an A, I have a question. Terrence, let's do that part first, okay? We're gonna make sure this is a good fit. Now, I know some of you, I don't wanna get any calls. Well, good, write down the number, okay? I understand, right? I don't wanna get calls, good, write down the phone number. Because the fact of the matter is, if you call in, all right, not only will I guarantee you a spot in Josh's session, All right. Not only will I get you all the stuff that goes with the program, but if you want to call in here, you know what I'll let you do for your first month? I'll let you work with the chief directly. All right. I'll let you literally copy his trades for your first month, because if you think, well, this might take me a little while to get up to speed, we know something about you. You want to get a return on this investment, and you know what? You want to get it in those 60 days. Well, the first month, the best way we can think of, right, is let you work with the head person here, right, and basically mirror what he does. Okay, so we'll link you up right to his account. You'll see when trades fire off in his account, guess what? You mirror the trades that he does. There it is. Okay, here's a guy that's up 600% in his account. So I got to think that right, is an awfully fair way to do it, because once you commit to this, when you think about it, you're putting us on the spot. We've got to perform. All right, and in that way, there's synergy in the relationship. So this one's really up to you at this point. All right, you're going to get the education. There's no doubt about it. No matter how you learn, you need an app, we got it. You want to do it live, we can do that too. But you got to get the formula. Okay, when it comes to the software, wait till you see what the automation is. I mean, I barely touched that. When you see all of the automation that's built into this program, it is phenomenal. All right, can the thing literally run itself? Yes, but you're not ready for that yet, but you will be, right? Probably in short order. You can start messing with those buttons today. We'll show you how to program that. Okay, and the fact of the matter is, once you're comfortable with the formula and the results, that's probably what you're going to do. Okay, that tool is awesome, and that comes with it today. And then you get to come trade live with us, and that is really where the rubber meets the road. Everybody says that. Can I just come trade with you? I don't want to reinvent the wheel, right? I don't want to take the long road. Can I just come trade with you? Well, you get to do that here too. And look, the results are there. The Shark Tank people have seen the results and said, we're on board. Okay, the only person that's got to try this out at this point is you. So I need to hear from you at this point. It's either option A, you get that awesome discount, you get a year's worth of charts. Option B, if you need some flexibility, right, that's in there too. One of those has got to work for you. All right, and either way you do it, you got 60 days. All right, so now I got to wrap it up, and I'll tell you what, that's a great way. Good. And a couple more of you have said that. Yes, we're going to have that conversation. Now listen, all right, I know not everybody put your number in, and I already know why. Okay, I know why. I know what's hanging you up. It's not that this doesn't make sense. You've seen A, B, C, D. Some of you typed superlatives while I was talking. This is awesome and so forth. You see that it works. Okay, you see that it makes sense, and it doesn't take a lot of capital for you to start trading. So what's the thing that's probably keeping you from doing this with our group? We already know what it is. It's the money part. Okay, well, I'll tell you what. If the only thing that's keeping you is the money part, I don't want that to keep you. I want you to experience this. So here's what you need to know, okay? There's a way to get this for less, all right? A whole lot less, but I can only give you one more minute to react to that, okay? I've got more than one way to get this program for a whole lot less, like free, all right? Free, right? A minute ago it was $4,000. Now you're telling me it's free. Listen, there's a couple of ways you can get this for free. All right, I got a tuition reimbursement program. I got a referral program. I got a couple ways you can get this for free. But here's the thing, all right, I need to make sure you're serious about it, because I'm going to limit this opportunity to the first 10 people that put their phone number in the chat box. All right, I'm only going to ask you, if you're serious about doing this and you want to put your number in the chat box, put the word free next to it, all right? And we'll figure this part out. What I'm trying to do is take your excuse away, because there's definitely a way to do that, all right? But I just got to ask you, if you're going to put your name and number in, please don't waste our time, all right? I didn't waste your time today. I gave you the best that I had so that you could make a good decision on the Forex market for yourself. And looking down at your notes, you know you got some good takeaways today. So this was a good use of your time. All right, all I'm going to ask is that if you want to take a step forward with this and put your name and number in the box, just be serious about it. All right, because I'm going to limit that to 10 people, and I don't want you taking a spot away from somebody that really needs this or that really wants to do it. Is that fair enough? So go ahead and do that. All right, I'm going to wrap this up, and at this point, before you log out, it's either A, B, or free. And I hope you got something out of this today. I know that we made some good progress. You're going to take a step forward when it comes to this, adding it to your tool chest of ways to make serious money. Okay, I want to thank the Investor Inspiration people. Renee, it's always a good time to come in here and talk to your group. I just want to tell you how much I appreciate it, and I appreciate all of you taking the time with me here today as well.